Good morning, traders. It's 8:03 a.m. on Wednesday, the 21st of December, 2016. We're getting closer and closer to the Christmas holiday here, and the expectation is next week is likely to be very quiet. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Overnight news is fairly limited. The largest bank in Italy has announced that it's running out of cash and may only be able to monetize for the next 4 months. Um, and other than that, there really isn't all that much to report. Um, there are some rulings yesterday at the yesterday afternoon. The weekly API oil inventories came in with a large deficit, negative 4.2 million barrels. This is the largest draw since the beginning of October. The prior is plus 4.7, so almost a 9 million barrel swing. We're getting the DOE inventory report today, and so we'll see how that comes out. So if you're watching crude, this is today's is likely to show us a pretty decent sized deficit or drop. So other than that, we're looking at for the session. We're looking at existing home sales expected to come out at 10 central U.S. existing home sales for November, expecting 5.5. Also, consumer confidence expected at 10 o'clock Eastern as well for December. This is the advanced figure. And then we're getting DOE crude, distillate, and gasoline inventories. Crude oil inventories expected at negative 2.5 million, distillates negative 1.75, and gasoline plus 1.25, all coming out at 10:30. Beyond that, the calendar is very clear for the rest of the day. Let's quickly switch gears and look at what we had as a plan yesterday. Yesterday, we're opening in a gap up, breaking above the consolidation that's been going on since the FOMC day. We've been trading inside of the FOMC day since it happened. We're still stuck in that triangle. And then yesterday we broke to the upside. So my expectation or my primary plan yesterday was for a drop into the prior day's range. Value high looking for 63 or 62, actually 62.50, 62. And then for the market to generally stay above the prior day's range, as you see there with the arrow, that's the primary expectation. The secondary expectation is for the market to go sideways, test up, drop, and then also go sideways. In either case, given the volatility that we've had and where we are and the time of year, I'm not expecting a runaway market. We may get one at the end of next week, though, into the end of the year. Last year, if you look back, December 31st was really big. So that's what we expected. Here's what we got. This is what we got. We went sideways. This looked like hypo 2 up to this point here. This looked like hypo 2 to me. And then we rotated back down. We hit the value high area. Remember that 62.50, 62. There's your low at 62 and a quarter. And then we basically held sideways. Yesterday's profile is completely balanced. Again, with higher kurtosis, meaning more compression. The overall volume yesterday was fairly light, as we would expect this time of year. So as we look at yesterday's volume, it's well below the expected value or the most common volume, which recently has been. This just a quick explanation. This is a 1-day per bar composite chart of the S&P minis. What you have here is the range intraday for RTH only, for the day session or pit session only, and here you have the volume. And then on the side, this is a statistical analysis or market profile or volume profile of the information provided here starting back in October on October 3rd of 2013. If we include all of that information, we see that the black line, which is the most, which is what's called the mode in statistics, or the point of control, is around 1.3 million. That is the most common, um, is the most common, and range the range of what's normal is 1.6 million to about 800,000. And yesterday was well below what we would consider normal. We only have 706,000 contracts traded. So this is the threshold. This purple line right here is the lower threshold, the upper threshold, and what is most common is the black. And you can see volume just dropping rapidly along with range. Range was on the lower threshold as well. Yesterday, we only had about 7.25, 7.25 points yesterday. Again, well below the 10 that is common, and that's likely to continue. Okay. Um, so as I talked about yesterday during the trader bite, that I expected the range to be around 7 points, and it was at 7.25. That's just a lucky guess. There's no crystal ball here. And what we've accomplished yesterday is to consolidate above the accepted areas below. And so the market's still kind of sitting sideways, but firming up on the bid side, in my opinion. The overnight session, oops, I hate when I do that. The overnight session, completely sideways. The point of control overnight right on top of the prior day's point of control. The high overnight is the value high of the prior day, and the low overnight is just below the value low. Nothing accomplished yesterday in the overnight session. Completely sideways and consolidating. Yesterday's opening type was an open auction out of range. An open auction out of range. There was a, how to identify that? You can easily see the open right here, swing low, swing high, then coming all the way back. That makes it an open auction, which tells us that the short time frame traders are likely to be in control during in that portion of the day, which means it's likely to get it's likely to get a big rotation out, but overall the mood of the day is sideways. That's why we want to identify the opening type early, and base our trades and plan on that, partially on that. Um, and so um, and so that's pretty much it for today. As far as what I'm expecting today, more of the same. Um, it's getting noisy here because there's just a lot of sideways action. Today we're opening right against the point of control, which means that we're very, very highly likely to get short-term traders again. We're likely to trade in an open auction. I'm looking for a dip down into the value low of yesterday. That's right here in the 65 area, and a test of 68 is a high probability. So I'm looking for either a dip down and a push to 68, consolidation before we break higher, and that would be hypo 1 for today. Okay, and then the other scenario is to essentially push higher right away, push through, pull back, and then sit sideways as well. We may take out this high that we put in yesterday at 69.50 and fall back in. I do not expect a trend. The prior weekly high is up at 22.73 or so, and we're not likely to take that out just yet. So this is what we're likely to see today. Again, the ideal situation in this kind of environment is that the market starts to roll over. Any targets, if we push higher and fail below and come back and then continue lower, then the target is going to be, oops, messing up these lines here. The target is likely to be 2258.75. We're likely to close this gap area down here. That would be hypo 3. That would give us the greatest opportunity and more volatility to work with, but it's not likely. There's just no incentive to make commitments today. Um, as we head into the holidays. Most of the window dressing's been done over the last few weeks here. There will likely be some next week, but don't expect too much. Okay. I'll leave you with that. Not much more to say other than just be picky, watch your risk. You know, you're here for the long run. And next week, you might consider just taking a break for what it is and just relaxing for a week and come back fresh. One piece of advice, next week is a great time of year to spend 4 to 5 hours just going through, as opposed to avoiding your statements, going through your statements, going through your performance, and deciding and finding out where you are, so you can create a benchmark for this year's performance, and to decide what your goals are going to be for next year. What are you going to accomplish in 2017? What are you going to do with that time that you have? What are your trading goals? So set that out so you can start out your year with a strategy, and then you can work on the tactics to get there. Good luck, and I'll catch you tomorrow morning. Take care.